Well, happy Friday, everyone. Rich Strell here from Protection, Florida. I don't know when you'll be watching this video, but it's Friday here, and we're celebrating. That's the cool thing about either owning your own business or working for someplace really cool is you get to maybe dress down a little bit on Friday, have fun, or just whatever rules. So I hope you are getting to do the same. Hey, today I want to talk about annuities. What is an annuity? How does it work? Could it possibly be for me? Today I'm going to talk about the three basic different types of annuities: a simple annuity, an indexed annuity, and a variable annuity. And then we'll talk about maybe a couple other strategies on how this might work for you. Dreams and goals in retirement's a big deal, and we get a lot of advice thrown at us on a lot of different things in trying to navigate and figure out what's best for us. So we're gonna go through some things today that I think will help you have a little bit more of a clear picture, at least in the way of annuities. So a simple annuity or fixed annuity, they're really, picture them kind of like a CD, like a certificate of deposit. You go to a bank right now, or at least what I looked at online this morning, and rates for CDs are about 0.5%. I think I saw one for 0.65 out there. And so we can do an annuity in a 3-year, 5-year, 7-year, 10-year range where you simply are going to drop a certain amount of money into it, and it's going to grow at that rate. And then at the end, you get your money back out, and you can decide to do it again or go another direction, or whatever the case might be. So just like a CD, put money in, you got to leave it there for a certain period of time. They guarantee you an exact interest rate, and you pull your money back out. Right now, our rates from a 3-year, 5-year, 7-year, 10-year annuities are between 2.1 and 2.6. This is always subject to change, but that's what they are today. They won't move a lot. So if you're looking for something like that, that's what you can expect. So let me give you like a $100,000 example, okay? We put in $100,000. I'm looking at a 7-year annuity that's got a 2.5% interest rate, compound interest. Basically, you're going to put $100,000 in, wait 7 years, and pull out a little over $119,000. Pretty black and white. Your performance will look kind of like this right here. Let's talk a little bit about indexed annuities. What does the word indexed mean? Why is that in front of the word annuity? Before we talked about fixed, it's a fixed rate. Indexed annuities are kind of a hybrid in between something fixed and secure, or exposed to the stock market. An indexed annuity is attached to the stock market, but not necessarily in the stock market. So what do I mean by that? The annuity companies, which are insurance companies, use the stock market as a guideline for certain investments. So the cool thing about it, they'll actually put floors in place to protect you from losing money. Well, how do they do that? So I can put my money in an annuity, and let's just say I want it to closely mirror the S&P 500, but I don't want to lose money. Well, the way it works is they also put a cap on your growth potential. And the reason they do that is because they're promising you won't lose money, but if it goes over a certain amount, they're going to participate in those gains as well. So it's a pretty cool concept. I can be guaranteed not to lose money in my annuity, but I can also gain money based on the market. So if the market's doing well, I can do well. Pretty neat concept. So that's what that looks like. It's attached to the market, but not in the market. There's floors, so you can't lose too much, but the trade-off is that there's going to be caps. So if the market goes up 20%, you may only get 6, 8, 10%. That's just how that works. They're neat because let's say you roll money out of an IRA or a 401k into one of these. You can invest it until you decide. A lot of times that's that magic retirement mark. If I'm 7 years from retirement and I've got $140,000 that I want to roll into an annuity, I can park that money into an annuity and then have it turn on an income for me for the rest of my life. So often we're worried about investing because we don't know what the outcome is going to be. We don't know what the market's going to do. We don't know when another COVID is coming. We don't know when a hurricane's coming. But with a product like this, you can have a black and white illustration that shows you exactly how much money you put in, how it's going to grow, and if you were to turn it on at this age, it's going to pay you X for the rest of your life. If you wait 2 more years, you're going to get a little bit more for the rest of your life. But once you turn it on, that's your exact income. Here's an example. I just recently ran a quote for a friend, and they were looking at putting in $140,000. I showed an illustration that said, okay, if we put in $140,000, wait 7 years, it's going to pay them $14,300 for the rest of their life. Now, obviously, if they're male or female, there's a little bit of a factor there because certain, women live longer. Obviously, if you're turning it on at 65, that's probably different than if you're turning it on at 75. But how cool is it in the planning process to know that I can project my Social Security. Now, I know some people, wonder if my Social Security is even going to be there for me, and that's a whole nother political conversation. But let's just say you're getting fairly close to retirement and you calculate your Social Security is going to be here, and you'd really like your lifestyle to be here. So we identify what that is, how much that difference is, and figure out a way to put a product in there that gives you the opportunity that guarantees and black and white fills the gap. That's a pretty cool concept. The other neat thing about these, and we can go crazy with these in terms of how many cool things they can do, and really it's just up to the individual or the family to decide what's the objective of these monies, what's the objective of what I want them to accomplish for me. But one neat feature that has to do with us not being able to predict the future is they have long-term care riders. Or can have long-term care riders. You do pay for it. So there's a little additional cost placed onto the annuity. But here's one example. Let's say I am receiving that $14,300, and then all of a sudden, at some point, I get put into a long-term care facility. My annuity company, and again, all companies are different, so and they're offering different things at different times. Of course, once they lock that in, it's locked in. But in that particular case, that $14,300 would be doubled. So they'd pay me $28,600 for like 5 years, I believe is what that scenario was. So there's cool things that you can really do. You can really shape a lot of financial planning around these things. Let's talk about variable annuities. Variable annuities is very similar to everything I just talked about with index annuities, except they are invested into the market. You can really have those high gain opportunities, but you can also lose money. And because an annuity, in my opinion, is a product that should be black and white and help you with your retirement planning, we do not sell the variable annuities. They can come qualified or not. So what is qualified money? It's simple. Qualified money is anything you have in your 401k, an IRA, something, or like for those of you who maybe are in a nonprofit organization, your 403b plan, anything that you're putting in and it's growing tax deferred. Uncle Sam or the IRS says you can put this money in and it'll grow tax deferred, and you don't have to pay taxes on it till later when you take it out, but there's these ages and rules and stuff like that associated with it. Those are qualified monies. But if you have cash in your savings account or qualified money in your IRA or 401k, either way, they work fine with an annuity. You can roll them right into there and have these same benefits. Either way, I guess I should mention, is even if you pull money out of your savings account to put into an annuity, meaning non-qualified money, they grow tax deferred. So without having to put it into an IRA, you can have those monies grow tax deferred. So the pretty cool concept there. You can also do annuities on joint life. Earlier, I was talking about a situation where I was getting $14,300 for the rest of my life. We can set it up and build you a plan custom to you and your family, you and your spouse, that shows you, well, what if I pass away And now my wife is left with nothing because we took this $140,000 and put it into something. It paid rich for X number of years. And then what? Well, we can absolutely set it up to where it shows that it pays me for in other words, whichever one of us dies first, it's okay because the annuity is going to keep paying the other one. So there's spousal options on the annuities. We call it joint life. Couple other cool features, and then I'll wind this video down because I try to keep these short. A couple other cool features is the contract value equals the death benefit. So all along the way, if you were to die while there's still money left in this annuity, if you didn't do the joint life option, it's just simply a lump sum. Or even if you did do the joint life option, it's a lump sum of the remaining of your annuity that goes to whoever you've identified as the beneficiary. If you didn't do a joint life and you want that lump sum to go to your wife, great. If you want it to go to your kids, that's fantastic. You can even send it to a charity. Whatever you want to do, we can make those arrangements. But don't be afraid to know, well, yeah, but what if I turn this annuity on and then I die 2 or 3 years later? Does all that money go to waste? Absolutely not. Guys, the sky is really the limit with these things. We can shape them and function them and fit them in and take this out and put this in and really make a customized package for you. We're also able to help you with the full financial picture. I have great insight on how much money you should have in savings. How much money should you continue to put in savings? That's not in an annuity or anything. How much maybe should be in a fixed annuity, something with a shorter lifespan where you can get it back out in a rainy day. And also, how much would it make sense to put into an annuity? You really want that well-rounded package. You don't want to take everything and put it in, you don't want to lock it up. You want that flexibility, you want liquidity, you want a full package so that you can feel comfortable that what you got moving forward is going to get you to retirement, but it's also going to help you be flexible when life throws you those curveballs. So with all that said, thank you for watching. If I could be of help in any way, the way we show these to people is we gather a little bit of information and we say, what is it you're trying to achieve? I'll come to the table with a lot of ideas if you are kind of struggling with, man, I just don't know what to do. I'll ask the right questions to help get you on track. And I'd love to sit down with you and have that conversation and maybe put something together for you just so you at least know what's possible. And if it's good for you, great. If not, we can flush it and say, hey, at least now you know what an annuity is, you know how an annuity works. It's a hard word to pronounce. And you'll know at that point if it's a good fit for you. Thank you so much for watching. If you think this video was helpful, subscribe to it. We got some cool stuff coming up. And also go back and take a look at the past videos. We just recently did a cool one on term life insurance. And I just appreciate you guys. Again, it's Friday. Happy Friday. I hope you have an awesome weekend. Hopefully I'm not ruining someone's mood by finding out that maybe they caught this video on a Monday or something. If that's the case, I'm sorry. But it's Friday. We're celebrating. It's Rich Strell with Protection Florida. I love you guys. Talk to you soon.